Welcome to part 3 of Accounting for Partnership Firms, Profit and Loss Appropriation Account. This is brought by Debit and Credit Online Classroom. If you have liked the previous videos, please subscribe to the channel. The partnership firms has to prepare Profit and Loss Appropriation Account besides trading account and P&L account and balance sheet. This Profit and Loss Appropriation Account as an extension of Profit and Loss account and is credited with the amount of net profit or debited with the amount of net loss which is to be transferred from Profit and Loss account. It is credited with the amount of interest on drawings of the partners, which is a loss to the partners but an income for the firm, and debited with interest on the capitals of partners, partners' salaries and commission, etc., which is a loss for the firm and income for the partners. If the partners decide, an amount is transferred to reserve and the balance profit is distributed between the partners in their profit sharing ratio. The balance of this profit is called net divisible profit, and the profit sharing ratio will be given in the partnership deed. And if in the absence of partnership deed or are silent about the profit sharing ratio, this profit has to be divided among the partners equally. Appropriation of profit is made up to the amount available for distribution. Thus, if after transfer of net loss and credit of interest charged on drawings to Profit and Loss Appropriation account, the balance is loss, appropriation is not made. But if it results in profit, appropriation is made up to the amount of profit. We have already seen that the nature of Profit and Loss Appropriation account is that of a nominal account. So according to the rules, we have to debit all the expenses and losses and credit all the incomes and gains. So let us see the journal entries now. First entry is for transferring the profit from Profit and Loss account to Profit and Loss Appropriation account. The entry will be Profit and Loss account debted to Profit and Loss Appropriation account. Suppose we have transferred a loss from Profit and Loss account to Profit and Loss Appropriation account. The reverse of the entry will come, that is Profit and Loss Appropriation account debted to Profit and Loss account. Let us see the entry for interest on capital. Interest on capital as an expense, and with this for partners it is an income. So with this interest on capital, the partners capital account will be increased. So the liability is increased. So we have to credit the capital account, and interest is an expense. So we have to debit it. The entry will be interest on capital account debted to capital account or the current account as the case may be. Then we have to close this interest on capital. The entry will be Profit and Loss Appropriation account debted to interest on capital. Entry for interest on drawings. Interest on drawings is an income for the firm, and with that the capital account will be decreased. So the entry will be partners capital or current account debted to interest on drawings account. To close the interest on drawings account, we have to transfer that to P&L appropriation account. Entry will be interest on drawings account debted to Profit and Loss Appropriation. Next entry is for partner's salary. Partner's salary is an income for the partner. So the capital account will be increased with that amount. The salary account is an expense account. So salary account debtor to capital or current account. To close the salary account, we have to transfer that to profit and loss appropriation account. Entry will be profit and loss appropriation account debtor to salary account. Entry for commission to partner. With this commission, the capital account will be increased. So we have to credit the capital account. Entry will be commission to partner account debtor to partner's capital or current account. To close the commission account, entry as profit and loss appropriation account debtor to commission to partner's account. If the partners has decided to keep a reserve, then we have to transfer that amount to the reserve account. Entry will be profit and loss appropriation account debtor to reserve account. So with passing of all these entries, we will get the balance to be divided among the partners. That is the net divisible profit. And this has to be transferred to the capital accounts. Then the entry will be, if it is a profit, profit and loss appropriation account debtor to partners capital or current account. And if it is a loss, then the entry will be partners capital or current account debtor to profit and loss appropriation account. Now let us see the format of a profit and loss appropriation account. The heading is profit and loss appropriation account for the year ended. Date. If it is 31st March, then 31st March and year. And ledger account, particulars amount column, particulars column, amount column, particulars on the credit side and amount column on the credit side. Then on the credit side, first of all, we have to bring down the net profit from the profit and loss account. Then interest on drawings is an income, so that also has to be credited. And on the debit side, we'll have, if it is a loss to be transferred from the profit and loss account, that loss, then interest on capital, which is an expense for the firm, then partner's salary, then partner's commission, and the reserve, if they are keeping a reserve. And then after passing all these entries, posting all these entries, we have to balance the account. And the balance is the amount to be divided among the partners, whether it is a profit or a loss. If it is a profit, we will have a credit balance and it will be transferred to the capital or the current accounts of the partners and it will be shown on the debit side. If it is a loss, it will be shown on the credit side. I believe that you have understood profit and loss appropriation account and do as many problems as possible. If you have liked the class, please share and like and subscribe to my channel. Next class will be on partners capital, like there's fixed capital method and fluctuating capital method. Thank you.